rates certainly feel expensive right now, right? The 30-year just a little bit over 6. Last week, that was the highest it had been in over a decade. So I think there is some recency bias though, right? We feel like it's high. If we kind of zoom that lens out 50 plus years, so historically over that 50-year time frame, the average has actually been 7.75, somewhere around there. So if we're looking today, 6, on a relative basis, kind of over the last 50 years, that's still pretty in line and cheap compared to 7.75, the historical average. So I think, there are a couple things you have to keep in mind. If you're wanting to buy or in the market and you feel like that rate is too high for you, well, what are your alternatives? So you stay where you're at, you rent, or you kind of bite the bullet and you buy at the 6% right now. So in my example specifically, we looked at renting just because we needed bigger space. I've got a growing family, we needed more room. When you did the math at current mortgage rates on a 30-year mortgage versus renting for a house that you need, it was the same monthly cost. So in my situation, it made sense. Yeah, I felt like, if I'm going to buy it, it makes sense. Everyone's going to be unique though. And I think those are the conversations we will. And if we take that 50-year scope and zoom out even further, the billionaire, Andrew Carnegie famously said once that 90% of millionaires got their wealth by investing in real estate, or that was kind of a piece of their overall net worth. If that holds true today, I'm not sure. But I think there are some merits to it. So, number one, you think the forced savings and the paying down debt on a long-term asset that should be appreciating. So if you look at, average housing sales over that same exact time frame, you kind of just see up and to the right the whole time with a couple blips here and there. So not just, paying down the debt, adding to that equity value, but you're also forcing yourself to do that every month. The devil's advocate view would be, okay, well, you own a home. Now, what else comes with that? Again, use myself as an example. Tuesday, our AC goes out, and I'm thinking to myself, wow, is this going to be $5 to $10 within a week of living here? Luckily, it was just the air filter, but these are the things you have to kind of be able to deal with. Third thing is, with that, you can get what's called a HELOC or a home equity line, so that kind of frees up the cash. And that's just a separate way for you to tap into some equity and some cash, and you've got it available if an attractive investment or you need a new AC comes along. And then the last point I'll make is, look, a lot has changed since COVID. I think we can all acknowledge that, and especially people's views on their homes. So home is basically your house and a quasi-office at times, and people are spending more and more time at their houses than they ever have. So I guess to summarize and answer the question, everyone's going to be unique, but I still think in most situations, it's going to make sense to purchase, depending on your circumstances.